Do you want to learn a simple trading strategy that's almost never wrong when it comes to trade entries? If your answer is yes, then you better stick around, because by the end of the video, you will learn everything you need to become a successful trader. I will teach you how to enter trades, where to place your stop losses and take profit targets, and most importantly, how to build this indicator setup you're seeing on the screen right now. I will also provide you with backtesting results for this strategy so that you can see that this is not all talk. The importance of backtesting is something I cannot emphasize enough, and I believe every trader should do it, because this is something that will make you unstoppable. Like, subscribe, and turn on those notifications so you don't miss out. Now, without further ado, let's get into it. So the first step will be to open TradingView.com and choose a chart of any security, and then set your time frame. For this example, I'm going to be using BTC versus the US dollar on the 5-minute time frame. The rules for this strategy are very simple and straightforward, and now let me explain the logic behind it. Okay, let's start with this indicator that you can see on the bottom. This tool is called the Relative Strength Index, and it will help us identify the overall momentum in the price action. A lot of traders are using this tool for finding trend reversals. For example, they would enter into a long trade when we do get oversold, hoping that the market will reverse and hit their take profit target. And then when the RSI is getting overbought, they would be entering into a short position. In my opinion, this way of using the RSI indicator is incorrect, and it can cause you to have a lot of trouble. So instead of using it for trend reversals, my suggestion is to use it for trend continuations. For example, when the RSI does get overbought, this should be considered as a signal that the market momentum has changed from bearish to bullish. However, we cannot enter a long position at the time when the RSI is being overbought, because the market participants are usually closing their short positions at this time. Our goal is to enter a trade when the price action makes a pullback. At this time, all of the sell orders have been filled, and the buyers are stepping back into the market to capitalize on the next bullish move. But in order to make sure that the price action is making a pullback and not a reversal, we need to apply a Fibonacci retracement. You can apply it by clicking on the Fib retracement here on the left hand side. Once you have selected the tool, draw the Fibonacci from the recent lower low to our most recent higher high. A lot of new traders don't really know where the lower lows and the higher highs are, and this is why we're using this indicator to help us identify them. By the way, in the settings of the Fibonacci tool, you need to make sure that only these 4 levels are selected. The following step will be to wait for the price action to get rejected off one of these 2 levels. It can either be the 382 or our 618. In this example, we can see that the price did not respect the 0.382 level, but it did get rejected off the 0.618 level. By the way, for this pullback to be valid, the price action must not cross and close below our key level. If the candlestick does close below the second level, the trade will automatically be cancelled, and you're going to be waiting for a new signal from your RSI. If the market does respect the level and makes a pullback, then the following step will be to wait for a sign of continuation trend. In this strategy, such sign will be an engulfing candle. When a bullish engulfing candlestick is formed, a green triangle will be printed below our bar, and this is going to be our final confirmation to enter a long trade. The stop loss will be positioned slightly below our most recent swing low, and for this strategy, we're going to be targeting 2 times the risk. When the price action reaches a risk to reward ratio of 1:1, you're going to be moving your stop loss to the break-even level. Here is another example for a long signal. So first thing, we're looking at our RSI indicator, and as we see, the white line just crossed into our overbought area. This means that the preparation for a long entry is now on. So we take our Fibonacci tool and draw it from our recent lower low to the recent higher high. We see the price action respected the 0.618 level. Notice that the candlestick did not close below the line. And lastly, we have our bullish engulfing candle. Another successful trade. Here is an example for a long trade that was not valid. We see here that the price did not respect any of our levels, so we move on and wait for a new signal from our RSI. As we see here, we do have another overbought signal, so we just adjust the Fibonacci to our most recent higher high and wait for our pullback. Okay, this time we see that the price action respected our 382 level and a bullish engulfing candle was formed. If you have a situation when the price action breaks below the first key level and without reaching the second one, it breaks back up. In this case, you do not wait for a new pullback, you simply wait for a new signal from the RSI. For sell entries, you're going to be doing the exact opposite. First, you're waiting for the RSI to get oversold. Second, you draw the Fibonacci from the last higher high to the most recent lower low. You keep adjusting it as the price action is making new lower lows. If the price action rejects off of one of these two levels and you have a bearish engulfing candlestick formed, this is going to be your signal to enter into a short position. The stop loss will be placed slightly above our most recent swing high, and once again you're going to be targeting 2 times the risk. Don't forget to move your stop loss to the break-even level once the price has reached a risk to reward ratio of 1:1. Okay traders, I hope the rules are clear, and now let me show you the backtesting results for this strategy. So after taking 100 trades, the win rate turned out to be 79%. I found those 100 setups within 3 months. The gain on our account was over 790%, and this is by risking only 2% of our account per trade. The profit factor is also looking good, and the max drawdown does not exceed 5%. So yeah, the strategy is definitely showing some really good results in the backtesting. Give it a try with some paper money and see how it goes. Okay, now let me show you how to build this setup. First, on TradingView.com, come over to your Indicators tab and search for the Relative Strength Index, or the RSI. Access the indicator settings by double clicking on it, and in the style section, make a few changes like I'm doing right now. Okay, this indicator is now ready. Let's move on to the next one. For the second one, type in higher high, higher low strategy, which is this one here by Lonesome the Blue. Access its settings as well and uncheck some of these options. For the last indicator, add engulfing candles, which is this one by R Munoz. Okay, the setup is now complete and I hope you enjoy it. If you did, please leave a like, subscribe and turn on those notifications so you don't miss out. I love you all. Peace.